The United Kingdom is experiencing a monumental economic crisis that continues to leave its citizens reeling in financial hardship. Over the past year, the effects of the crisis have only grown more serious, leading to further instability of vital industries and decreased revenues for business across the nation. But what are the circumstances that led to this situation? There are a lot of questions that need to be answered. So whether you're already affected by these issues or are simply curious about what's happening, tune in to gain insight into the UK's current economic stimulus efforts and learn how they may impact you in the near future. Hello guys, and welcome back to the channel. In this video, we'll explore the underlying forces driving the economic turmoil in UK and discuss potential strategies for alleviating the hardship. Even if the leadership of Britain's Conservative Party is changing, the country's dark economic position won't improve with only the transition in the ruling party. It will take a lot more than that. The rate at which prices are rising is now one of the highest in the West and has reached its quickest pace in the last 4 decades. The ever-increasing level of debt, which stood at £2.7 trillion in Q3, which the government is required to service, has led to a rise in those costs, and a downturn in the economy is on the horizon. In the third quarter, the GDP of the United Kingdom contracted by 0.2%, indicating the beginning of a recession that is expected to strike Europe next. According to the Office of National Statistics, the gross domestic product of the United Kingdom had a decline of 0.2% between the months of July and September. The GDP of the United Kingdom shrunk by 0.4% from where it was at the end of 2019, before the coronavirus epidemic started. The United Kingdom's economy is the only one of the G7 nations to have shrunk during the third quarter. According to the ONS, another factor was the additional bank holiday that was observed on September 19th in observance of Queen Elizabeth II's burial. On that day, some firms were closed or their operations were altered. GDP took a 0.6% hit in the month of September. Nevertheless, a general slowdown in economic activity may be inferred from the GDP's recent decrease. Inflation that has been persistently high for many decades is exerting downward pressure on household earnings. Interest rates are rising, and both corporate and consumer confidence are declining. Inflation has soared to the highest levels since 1980s at around 10%. But who is responsible for all of this? Former Prime Minister Liz Truss is the one who is being held accountable. After being sworn in as Prime Minister of the United Kingdom, Liz Truss made a campaign pledge to revitalize the country's economy and set it on a course toward long-term prosperity. Instead, her term has been marked by instability, with mortgage rates soaring to all-time highs, the pound plunging to all-time lows, and volatility in bond markets, which posed a danger to the nation's capacity to maintain its financial stability. Even though Truss came to power during a challenging period, with the cost of living crisis, the ongoing conflict in Ukraine, and the lingering effects of the COVID-19 pandemic, her decision to announce £105 billion, $116 billion of tax cuts and spending increases without providing details on how she would pay for it spooked the markets that were concerned about the escalating public debt. This weakened trust in the government's capacity to pay its debt and raised doubts about the economic credentials of the new prime minister who entered office following a profoundly contentious struggle for the leadership of the ruling Conservative Party. The race had been extremely divided. Kortang did not provide any independent analysis of the likelihood that the government's objective would be attained or the effect that this would have on the public budget. It was speculated as a result that the government would have to borrow money in order to fund the package, which would boost the amount of public debt to an unsustainable level. In addition, the decision made by the government to inject billions of dollars into the economy led to further price increases. This means that the Bank of England required to raise interest rates even further in order to control inflation, which is already at a level that is nearly 40 years higher than it has been at any point in the previous 39 years. In response to these concerns, Kwarteng has stated that he will publish an analysis from the Independent Office of Budget Responsibility. This analysis will be accompanied by a medium-term fiscal plan that outlines how the tax cuts will be paid for. How people living in UK are affected. The continent is predicted to enter a deeper recession, which is predicted to last up till 2024, with nations from France to Finland suffering a double whammy from increasing inflation and sluggish or declining growth. Global prices for petroleum, food, and fertilizer have increased as a result of Russia's conflict in Ukraine and the European Union's punitive sanctions on Russia. As more individuals return to the workforce following the conclusion of Britain's pandemic lockdowns, wages in Britain rose by 5.7% in the third quarter, at their strongest rate in 20 years. However, inflation is outpacing those advances, making it difficult for people to keep up. Additionally, some of the employment growth hides an underlying precariousness because many people are re-entering the labor force as independent contractors. When prices were taken into account, wages overall decreased by 2.7% in September. The increase in energy prices might have been worse. The Statistics Office reported that a rise in energy bills beginning in October 1st as part of a reset by the nation's energy regulator to reflect market prices has been anticipated to boost energy costs by about 75%. An attempt by the administration to freeze rates in response to public outcry about that hike backfired and led to a 25% increase. What future holds for the UK economy? According to a report in the media, the Bank of England has revealed in a dire warning that the United Kingdom will fall into a recession by the end of 2022 that will last for an entire year. This will be the longest recession the country has experienced since the 2008 financial crisis and will be as severe as the one that occurred in the 1990s. Inflation will reach a peak of more than 13%, which will be fueled by the skyrocketing price of gas and fuel this winter. According to the Daily Mail, the big squeeze in Britain got even worse after the Bank of England raised interest rates by 0.5 percentage points to 1.75 percentage point, which was the highest single raise in interest rates since 1997. This added £1,000 a year or more to the average non-fixed mortgage, creating a new world of pain for homeowners. Prices for food, petrol, gas, and several other products have skyrocketed in response to the pandemic and the conflict in Ukraine, reaching record highs. Nonetheless, some experts have stated that the Bank of England has been too slow to respond as Britain cruises into recession. According to the Daily Mail, Governor Andrew Bailey blamed the activities of Russia today for both the economic crisis and the energy shock that the world is now experiencing. Because of rising energy costs, the economy will enter a recession that will last for 5 quarters, with the gross domestic product, or GDP, declining in each quarter of 2023 and dropping by as much as 2.1%. The Bank of England predicted on Thursday that there will be either no growth at all or very little growth until the year 2025. It referred to future growth as being extremely feeble by historical standards. Due to the precarious state of the economy, real household earnings are expected to decline for the second year in a row. This will be the first time this has occurred since records started being kept in 1960s. They are expected to decrease by 1.5% this year and by 2.25% next year, which would cancel out any salary increases. The economic crisis in the UK has been a contentious issue for many years, leaving its citizens juggling various financial issues and feeling the gravity of the situation. As this video showcased, it is important to understand the depth and potential impacts of such crisis before we can move forward. It has been an interesting journey to explore these effects, but our conclusion is clear. there is an urgent need to take preventative measures so that another economic crisis in the UK can be avoided altogether. Thank you for watching this video and stay tuned for more related topics from us.